So check this out, okay? Cloud ARR, which is Cloud Annual Recurring Revenue, which obviously is a subscription model, was up 83% year over year for this company. And the actual dollar value here is approaching near 1 billion, which is a huge milestone for any SaaS business. Now, this business also has some non-cloud recurring revenues, which also grew, but not as much, kind of a modest 23% year over year. So the blended annual recurring revenue for this company was a strong 39% year over year. Now, I wanted to provide you some context up front because I didn't want you to be biased based on the company name. I just wanted to look at the numbers, the metrics, the growth, the actual facts here, and I think we can all agree these numbers are quite impressive. Here we can see that cloud as a whole makes up 39% of this business's revenue in their fiscal year Q1 2022. So it is big, but it's still not the majority of their business. However, the company is doing well on transitioning to a subscription model. We know that they're executing well because they have over 537 customers on a recurring model, paying this company every single year over $1 million. And out of this 537, around 203 of those, close to half, is from customers that are purely on cloud recurring revenue. So Nick, are you gonna tell us what company this is? Splunk, guys. SPLK, that's the ticker symbol here. And I want to discuss a few things with this business because they reported last week. Quite a few things have caught my attention here that I'm going to share in this video. And I also do want to point out some bad or red flags that I noticed that you should be aware of if you're investing in this company. But I hope that by introducing this stock here, without any bias, just looking at their figures, their facts, their growth, you're willing to listen through to this video. And, if I did pique your attention, hit the like button down below. So Splunk, as we saw, had a good quarter here of transitioning their company from a purely on-premise model to a more cloud-based recurring model. And, they're doing this year over year, month over month, quarter over quarter, and it's getting better. As a shareholder in this company, and, as someone that talks about this company quite publicly, I think that they're doing a phenomenal job here executing, and I think the future looks extremely bright. Splunk is also a leader when it comes to big data analytics, and while they have competitors like Datadog and Elastic, which are the new kids on the block, the cooler, cloud-first, recurring revenue first type companies, Splunk has seen the value that these other companies bring, and they're like, what, we can do the same for our customers as well, and that's what they've been doing. And guys, they are doing it well. This is why over 90% of the Fortune 100 companies trust Splunk for their big data analytics. Another positive here is the cloud gross margins for this business is sitting at just above 60%, and it did increase year over year. And on the conference call, Splunk mentioned that their long-term goal here is to actually grow this to 75% plus. The company is seeing a lot of one-time expenses when it comes to cloud and deployment and infrastructure, which should iron itself out over time and should help those margins expand over time, which of course will result in profits growing over time. Another big metric, guys, that I look at is free cash flow. You know that I talk about this a lot on the channel. I want to see not only positive free cash flow, but I want to see strong growth in free cash flow, because that tells me the company is sustainable and they can keep investing back in their business to keep growing. Splunk here reported nearly $70 million in free cash flow, which alone is not a huge number, but it is a 100% increase year over year for this company. So this is another data point that I think is trending in the right direction. Looking here at the next quarter, they provide really good overall guidance, which I personally was satisfied with. Cloud ARR nearly $1 billion, total ARR of $2.6 billion, and total revenue for the quarter supposed to come in at around $550 to $570 million. So from this earnings report, overall, it was a good report. Splunk, I think, didn't really disappoint. They came out, they showed that they're still growing, they showed that they're still acquiring customers, they still have those large businesses that trust them. As a shareholder, like I said, I am satisfied. But that being said, it wasn't all perfect. There were definitely some negative points in this report. So So I want to point some of those out now. First thing that I noticed was that their average contract duration dropped in this quarter, which isn't a huge deal since we're still looking at a 2+ year contract term length, but it is something we want to keep a very close eye on. The longer you can lock in a customer, of course, the more predictable your revenue becomes, and that of course instills more confidence in investors and adds more stability to your business. So it's a good thing. So when we see numbers for contract duration kind of contract a little bit and drop a little bit here, it does raise a little bit of a red flag, but right now I'm not really concerned. This could be a short-term thing. The next thing I noticed was the big increase in G&A, which saw a double up year over year. Now, while I like to see them spend more on R&D, I have no issues there at all because I think any great tech company specifically needs to keep investing in R&D. The G&A expenses, I think that needs to be managed, and we saw $162 million this quarter, which caught my attention. On the conference call, they did say that they hired a lot of big names from like Okta, AWS, and some other companies. So this increase is probably for some of that compensation and that kind of stuff. And they also said they've been hiring staff aggressively. So it looks like Splunk's really doubling down on their workforce here and investing heavily in their people. And just as a side note, looking online, you can look on YouTube, you can see there's a lot of videos on Splunk interviews and how to prepare for Splunk interviews, because it's a very specific company, and people that get in are highly qualified. They are kind of experts in their field. Splunk hires some of the brightest minds out there, so it makes sense that they're investing in their people, they're paying them more to keep them with the business. But anyways, the increase in G&A expenses surprised Wall Street because it put out a much larger loss here than expected, and Wall Street hates losses, so the stock got punished. Because of this, analysts are updating their models now for 2022, and we are expecting a bigger loss this year for the company and a small loss of 14 cents per share next year, and this was actually compared to a previous profit they were expected to bring in of 26 cents per share. So, when a company goes from predicting profitability next year to losses next year, it's never a good look for the stock short term, but again, we can see the trend in the positive direction, right? Like, sure, they're going to be on the brink of profitability next year. Maybe this story gets pushed out another year. I'm okay with that. This is a long-term play for me. I think Splunk is showing us that they're trending in the right direction. Free cash flow is growing, revenue is growing, recurring revenue is growing. I think the story, guys, is still intact. What we're gonna see with Splunk, this is my prediction, based on other SaaS businesses that I've seen, is that free cash flow for this company, once they are fully transitioned and really focusing on growing their profitability, it's going to be huge. They're going to pull in hundreds of millions, if not billions of dollars in free cash flow over time. And that is when Wall Street's going to be like, this stock is a no-brainer buy. I think at that point, it'll probably be somewhere in like the $50 to $100 billion market cap, well above where it is today. So I think this presents us such a great opportunity at today's prices, which I believe is like under a $20 billion market cap. There are many other companies out there that do a lot worse, that have somehow garnered much larger valuations, and sooner or later, the market realizes this, money flows out of those type of companies and into businesses like Splunk. And while everything may seem negative, we can see here that analysts are still fairly positive. They see a 44% upside in the next year for Splunk, even with their updated revised numbers. So guys, the future still looks bright for this oversold stock. Now, I know a lot of you are non-believers in Splunk, and you know what? Most of the people that don't care about Splunk probably aren't even watching this part of the video. But it is important to note that sometimes you have businesses that are misunderstood. Sometimes you have business models that are misunderstood. And I think in this case, you have a combination of both. You have a business that people don't really understand that well. You have a business model of them transitioning that people don't really understand that well. And all you see from a high level is an old company that is losing their revenues and numbers are dropping year over year and everything looks bad. But again, if you peel the onion, look beneath the covers like we did in this video, you see that they're transitioning well, they're becoming a modern company, and they're becoming a very successful company at that. I think that looking back a few years from now, I'll be happy with this position. I'll probably wish I bought a little bit more, let's be real, because I think at that point we'll probably see a 2 or 3x on our investment. But hey, let's see what the market gives us. If we see lower prices, I'll probably be buying more. But anyways, guys, I am bullish on Splunk. That hasn't changed, and I hope this video helps you with your analysis as well. Anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.